When you're managing both personal and business finances, it can be incredibly tempting to mix the two. Especially for small business owners, freelancers, and entrepreneurs, the lines between personal and business spending can blur, creating confusion and potential financial chaos. However, keeping these finances separate is crucial for not only maintaining clarity in your accounting but also ensuring tax compliance, building a strong business credit history, and avoiding potential legal issues. In this video, we'll discuss the top 10 rules for keeping your personal and business finances separate to ensure your financial life remains organized and secure. 1. Open separate business bank accounts. One of the first and most important steps to maintaining financial separation is to open separate bank accounts for your business and personal finances. Having a dedicated business checking and savings account helps you keep track of income and expenses related to your business without mixing them with personal transactions. This will also make it easier when tax season rolls around, as all business-related transactions will be clearly separated, simplifying your bookkeeping and reducing the chance of making mistakes. 2. Obtain a business credit card. A business credit card is an essential tool for separating business and personal finances. Just like a separate bank account, using a business credit card ensures that your business expenses are recorded separately from personal ones. Business credit cards often come with rewards or perks that can benefit your company, such as cashback on purchases, travel rewards, or expense management tools. This also helps you build business credit, which can be crucial for securing financing in the future. 3. Establish a clear salary or draw system. When you're the owner of a business, it can be tempting to take money from the business as needed without any formal structure. However, this approach can quickly blur the lines between personal and business finances. Instead, establish a clear salary or draw system where you pay yourself a fixed amount on a regular basis, separate from business income. This system will make it easier to track your personal income and ensure that business funds are used for legitimate business expenses. 4. Maintain accurate and detailed bookkeeping. To keep your finances separate, meticulous bookkeeping is crucial. Ensure that all business income and expenses are tracked using a reliable accounting system or software. Record every transaction promptly, and categorize them appropriately so that there is no confusion when it comes time for tax filing or financial analysis. Keeping accurate and up-to-date books also helps you spot any financial issues early on, preventing them from growing into larger problems. 5. Use business-specific payment methods. Always use business-specific payment methods, such as business checks, credit cards, or digital payment platforms like PayPal for business transactions. Avoid using personal accounts to pay for business expenses or depositing personal income into your business account. This clear delineation makes it much easier to track and verify your financial records and ensures that you are not mixing personal spending with business costs. It also safeguards you against any tax-related issues that may arise from commingling funds. 6. Reimburse yourself for business expenses. If you must use personal funds for business expenses, always reimburse yourself properly. For example, if you use your personal credit card to buy business supplies, make sure to reimburse yourself from the business account. Document these transactions with receipts and ensure they are clearly recorded in your business books. This helps maintain a clear boundary between your personal and business finances and protects your personal assets in case of a financial dispute. 7. Set clear boundaries for business use of personal assets. In some cases, it might be necessary to use personal assets for business purposes, such as using your home for office space or a personal vehicle for business transportation. In such situations, it's important to set clear boundaries and keep track of how much of your personal assets are being used for business. For example, you may need to track mileage for tax purposes if you're using your car for business, or you may need to allocate a certain portion of your home expenses if you're using a room as an office. By doing this, you ensure that you're not mixing personal and business resources and can justify the business use of personal assets if required. 8. Separate personal and business taxes. Business taxes and personal taxes are handled separately, and it's crucial not to mix them up. When it's time to file your taxes, ensure that you're reporting your business income and expenses accurately on the appropriate forms. If you're a sole proprietor, you may be able to file both personal and business taxes together, but it's still essential to keep them separate in your bookkeeping. Consult with a tax professional to ensure that you are taking advantage of all eligible deductions while maintaining clear separation between your business and personal taxes. 9. Use financial software for both business and personal finances. Investing in financial software for both your personal and business finances can streamline your efforts to keep them separate. Many accounting programs, such as QuickBooks, FreshBooks, and Xero, allow you to manage multiple accounts and track both personal and business expenses. These tools often offer customizable categories and reports, so you can easily differentiate between personal and business transactions. With proper software, you can generate accurate financial reports for both your personal and business finances, making it easier to assess your overall financial health and plan for the future. 10. Consult a financial professional for advice. Finally, one of the best ways to keep your personal and business finances separate is by consulting with a financial professional, such as an accountant or financial planner. A professional can provide expert advice on how to structure your finances in the most efficient way, ensuring that your financial separation is not only clear but also optimized for tax purposes, business growth, and personal financial security. They can also help you avoid costly mistakes, such as overlooking important deductions or not following the correct tax filing procedures for your business. Keeping personal and business finances separate is a fundamental practice for any entrepreneur, freelancer, or small business owner. Not only does it simplify your accounting and tax filing, but it also protects your personal assets, helps you build business credit, and allows for more accurate financial analysis. By following the 10 rules outlined in this article, such as opening separate bank accounts, using business credit cards, maintaining accurate bookkeeping, and consulting financial professionals, you can set your business up for long-term success while safeguarding your personal financial well-being. Taking the time to set these boundaries now will save you time, money, and stress in the future.